All right. So do you think the yen carry trade is over, or do you foresee more potential disasters arising in the future of this situation?
For those who don't know, the yen carry trade is when you could borrow money from Japanese banks for little and let's say buy bonds or Nvidia or stocks. But now that the rates have adjusted, people have to pay those loans back. So if you are in a losing trade, you're in trouble. Do I foresee that there'll still be some catastrophe here? A little bit, but I think everything is priced in now. If the market drops again, it would be because of another disaster. It was interesting to see like the investor class talk about it, but it didn't get, I think, the burn that it should have got in the PR cycle or the media cycle. I told you guys the VIX would recover. It's currently at 19, so you didn't have to worry about that. So the market is going back up. It's recovered pretty well. But no, I think if we have a disaster that drags the market down, it would be another catalyst, and this won't be it alone. But I was terrified to see the Nikkei almost go to 29,000 that quickly in a week when the Nikkei is like a zone of safety for most investors. But here's a good lesson to learn. You can't have negative interest rates or zero interest rates for a long period of time. For those who got in and who borrowed hundreds of billions of dollars or billions of dollars and did the trade, you made some real money. But you can't have a zero interest rate environment forever. And it matched the peak of 1999 and fell apart then too. So
yeah, that was interesting. When I looked into it, you talk 0% is just like, how do you do it? I think it's at a 0.25%. It's a 0.25% right now.
Yeah.
And so it obviously you understand why you would want to trade with a partner that has that low of a rate, but the people who live there, that doesn't help because the imports now become even more expensive.
Yep.
But as interest rates drop here, you would wonder, and economic and geopolitical events that take place, the effects that it'll have on the yen. And we saw like just the mention of geopolitical fears last week kind of shifted things for them. Is it the end of it? No. Not when a country has that low of an interest rate.
And it only can go higher. You can't have a negative 2% interest rate for 25 years or 20 years.
Yeah.
Here's what we need to learn from when we saw the market Mondays to now. All the easy gains are gone. Everybody was a rock star when there was zero interest rates. Now, as the interest rates go up, it's going to be fewer stocks that are going to outperform the normal 8 to 12%. And now we're back to a normal range for how stocks should be performing. I keep saying it, like the zero interest rate environment was like the Balco era of baseball. It's juiced up, bunch of steroids. Snapchat at one point was more valuable than GM and Ford. And like now interest rates have gone up and the world has gone back to reality. So the financial BBL is over. Take the silicone off the balance sheets and let's get back to normal business.
Is there a number for the Japanese interest rate to rise to that would make this a grave concern, right? It's been at zero for so long. It's at 0.25% now. Is it like
if it gets to 4%,
2%, 3%, right?
2.5 before, ooh, baby, they're gonna have to call Barack back. And listen, Auntie Shell gonna be in office if we get to 4%. If a 0.25% raise dropped the Nikkei 12 to 15%, if it went to 4, hell on earth.
Yeah.
Hell on earth. This is like, Shadi, don't this remind you of the dot-com bubble? I mean, the 2008 bubble all over again, just in another area. It's like you over leverage. Now you get the margin call. Everyone can't pay. And now everyone's shuffling. You have to know, most important thing in trading is knowing when to exit a trade. So if we get back in a zero interest environment, borrow to the moon, but just realize you have 2 years to pay it off when you're in a zone of safety. When you get to hold it for 5, 6, 7, 8 years, and then the discipline goes out the window, finito.